everybody's better off with a stronger economy. A stronger economy means that interest rates can move a little closer to something more normal in a context in which everybody's better off.
So raise the interest rate is exactly what the Bank of Canada did today, up 0.25% to 1.25. Canada's big banks have now all raised their rates by the same amount. And despite the economy's strength, top bank officials say there is still uncertainty and reason to worry.
And that's really household debt's keeping me up at night.
Yeah.
And not so much that I think it's just a vulnerability that we would face if we had a shock. There's plenty of reasons.
There's another big unknown on the economic horizon. We'll get to that in a minute. But first, we asked Jacqueline Hansen to look at what today's rate hike means to Canadians, many of us with increasing amounts of debt, and maybe tonight a bigger mortgage too.
This is one of the larger 1+ dams.
A third rate hike in 7 months is forcing a generation that has only known ultra-low rates to think differently about debt. And some already are.
It is one of the bigger ones for sure, like you said.
Darshit and Reedy said want to be first-time homebuyers in Toronto.
We now stopped doing things that we can't afford because it's just because you end up liking it, and if you like it too much, you would have that conversation of overstretching yourself, which we don't want to do.
They've been waiting for the right time to get in.
We had the foreign buyer rule come in, we had the increase in interest rates come in, and the beginning of this year stress test come in, but we're not yet seeing any softening in the marketplace. There are still
at least not for condos.
They are hopeful that higher interest rates will help squeeze out some of the home buying competition as borrowers become more limited on how far they can extend themselves, especially if rates continue to go up.
This is a rising rates environment, one we haven't had for quite some time that Canadian consumers will have to adjust to.
Most analysts are expecting at least one, perhaps two more hikes by the central bank this year.
We're now going to be in a different paradigm where we have to, for the first time in a long time, recognize that interest rates are rising, and a lot of these behaviors that developed over the last decade will have to unwind.
I like the dent too.
Difficult, but perhaps necessary for consumers and businesses that have been relying on ultra-cheap credit and digging deeper into debt for years. Jacqueline Hansen, CBC News, Toronto.
So strong economic growth in Canada was behind today's rate hike, but the bank is keeping a cautious eye on the United States as it looks ahead. David Cochrane has that.
Interest rates are going up because just about everything in the Canadian economy is going right, and the Bank of Canada says government spending is a big reason why.
We would still have a sizable output gap in the economy were it not for the fiscal actions that have been taken.
That's a technical way of saying the economy wouldn't be doing nearly as well if it wasn't for the Trudeau government's decisions to boost child benefits to families and spend big on infrastructure, which Pola's, like the Liberals, calls an investment, even if it means a deficit.
Some of these things are worth actually borrowing for.
In short, Pola suggests a Liberal approach to now has worked, but there are problems ahead that can be summarized in one word: Trump. The hot Canadian economy would be scorching if not for the wet blanket of NAFTA uncertainty. Companies unsure of where the talks will go are either sitting on their money or putting it elsewhere.
Well, they face a decision about whether or not it's just safer, given the uncertainty, to just do the investment in the U.S.
So at best, some economic expansion in Canada has been delayed by NAFTA. At worst, it has been lost entirely to the United States. And there are other problems. While Trump threatens to thicken the Canada-U.S. border, he has slashed American corporate taxes, bringing them down to a rate comparable to Canada's.
What you have is what used to be a strong advantage for Canada is being lost. You add to that the uncertainty that we have as a result of NAFTA, and people making business investments are saying, where am I better to make that investment?
That's not a problem for the Bank of Canada to solve. That's up to the government. They've chosen to spend big to jolt the economy. Now they face pressure to cut taxes to keep those gains. David Cochrane, CBC News, Ottawa.